What was not calm this week was Bitcoin. It plunged from a high of $44,000 at the beginning of the week down to $35,000 on Friday. But in between, it went all the way down to $30,000, all the way up to $42,000. And as I say, it ended up at $35,000 at the end of the week. It was all exciting to watch, but did it signify much beyond the four corners of crypto land? For that, we turn to our regular contributor, Gillian Tett of the Financial Times, where she is chair of the editorial board and editor-at-large U.S. Gillian, great to have you, particularly because you've really studied crypto so carefully. Does it have any significance beyond the four corners of crypto land?
Well, here's the good news. It doesn't have that much significance because at the end of the day, it still is only a $2 trillion market, and that is not enough to make it truly systemic. And we have seen dramatic swings in cryptocurrencies before. It's worth remembering that you don't have market makers in this sector. So, of course, that tends to make it a lot more volatile than most of the other types of assets like equities that investors may be looking at. But the bad news is that this does show that the foundations of cryptocurrency are a lot shakier than many of the enthusiasts have actually factored in before. There's a lot of opacity. There's a lot of dependency on what stance the regulators are going to take. And we still don't really know what stance that's going to be. And the other point to make, which is really important, is that all of this is coming as not only Wall Street banks, but big asset managers like Fidelity start to move into this land. And of course, this week, the other bit of really big news was that the Federal Reserve, along with other central banks, is looking at whether it could create a digital currency of its own.
So let's talk about that. Are the regulators more or less declaring a form of war on cryptocurrency? I mean, because you had, as you said, the Jay Powell, the chairman of the Fed, coming out saying, we're going to spend the summer studying this. We're going to come up with a report exactly what we want to do on digital currency. And then you had both the PBOC saying, don't you dare trade in this stuff, buy stuff with it in China. And you also had the state council saying, don't even mine it over here. It sounds like the regulators are starting to get their dander up.
Well, there's two or three things going on here. On the one hand, there's a regulator saying, actually, the underlying technology of what's going on here, the blockchain, is actually potentially very useful. But if that is going to be useful, we actually want to try and control it some way and ensure that money is still tethered to a central bank. And one of the biggest risks to Bitcoin and other types of tokens going forward is that if the central banks ever get serious about creating their own digital currency, they could essentially squeeze out a lot of these bottom-up innovations. At the same time, you're seeing regulators saying, well, we're getting concerned about the tax implications of all this. And the IRS indicated that it's going to start treating Bitcoin like any other asset and demanding a lot more disclosure, reporting, and of course, payment of taxes. And again, it's unclear whether people have factored that in or not. And then last but not least, you have the regulators who are trying to work out how they're going to control, shape, monitor, define this. China said they're going to stop their banks essentially dealing with this. But and other jurisdictions will be doing the same. Turkey came in with very strong rules quite recently too. But at the heart of the regulatory dilemma is a debate going on amongst regulators about, is this a currency, in which case someone like the Fed should be involved? Is it a security, in which case someone like the SEC should be involved? Or is it actually a commodity, a store of value, more like gold, in which case maybe the CFTC should be involved? And right now the answer is not clear, so there's a lot of uncertainty swirling around the whole crypto space.
And maybe, Gillian, that's another way of asking the question that I have, which is, what role, if any, does this play in the larger financial system? I mean, right now, given the volatility, you can't really buy things. You can't denominate prices in this, as Elon Musk apparently has concluded with Tesla. It's not really investable given the volatility. So what role, if there is a role in the larger financial plan, does it serve?
Well, if there were any CFOs who were thinking of following Tesla and making it part of their portfolio strategy, right now they certainly are not going to do that given how volatile it is. So we know it's not a stable short-term store of value. We know it's not a very good payment system at all, because if it's going up and down in price, why would you use it to pay for anything? So it's probably best considered more like a speculative type of security right now, which, you know, is not the end of the world. But that's certainly the way that probably investors should be seeing it if they are looking at it at the moment. But there's one other very important thing to point out as well, which is that when Elon Musk came out and expressed reservations about Bitcoin recently, he did so for environmental reasons. That shouldn't be a surprise to anyone who's been in this space. We at the Financial Times have written a lot about this. And in fact, one of our top performing stories this week was a deep dive into the environmental implications of Bitcoin. There's a lot of activity right now in the fintech world and in environmental groups trying to see if they can find a green Bitcoin, which doesn't consume quite so much energy, or rather a green cryptocurrency that isn't Bitcoin, because probably the answer is going to lie in something other than Bitcoin. But again, as people are saying, well, I can see down the tracks, there could be an investor revolt against dirty Bitcoin and people flooding to other newer currencies, which are less environmentally damaging. That's creating volatility too.